ASML Holdings. They're the company, of course, who produces the equipment that produces AI chips. AI chips are blowing up. If you've taken a look at SOXX or SMH, both of those stocks are ETFs for the semiconductors, through the roof over the past couple months, ever since NVIDIA announced their revenue gains and continuing gains going into the future with what's going on with AI and the buildup. ASML Holdings has been following suit, but it's a bit overvalued. In this video, what I'm going to do is break down the valuation and show you how this one is likely to sell off in the near future. Now, the economy is probably going to see some selling in the stock market simply because inflation's too high and interest rates are going to move higher. ASML stock has a long way down to go before it gets a valuation that is more rational than where it is right now. Let's jump in and I'll show you a couple things I'm looking at and break down ASML Holdings. Here's a look at ASML, the stock. This is the weekly chart going back a couple years all the way back into 2018. And as you can see over the past, since November, it's really shot up, clearing its most recent hurdles. In 2021, of course, it had a previous high that got cleared. All right, what's going on? First off, my analysis. When I look at any particular stock, I ask the question, what's going on with the economy first and foremost? No stock is an island. Given that, inflation in the United States, too hot. We keep getting numbers that are showing us that the Federal Reserve is not done raising interest rates, but, and here's the big asterisk, there's a presidential election and the Federal Reserve is never going to want to look like they're influencing an election one way or the other. They're likely to do absolutely nothing, which means more than likely stocks will continue in an economy that's a bit too hot. That's bad news. The reason why is the Federal Reserve will then have to work a little extra harder after the November 5th election. Take a look at employment, take a look at inflation numbers, and that should give you an idea that this economy is moving forward. Given that, I do think stocks are going to continue to move higher. ASML is going to be one of those. Contained within that, now we start taking a look at AI stocks. Of course, they're blowing up. There's going to be a huge ramp up of AI across the board. Now, ASML makes the equipment that produces the chips. So this is sort of a second tier, if you will, semiconductor chip maker. They are important and they're in, say, SOXX, SMH, some of the bigger chip maker ETFs. The price is getting a bit frothy, and I kind of kept looking outward to projections all the way out to 2027. And anybody can say, hey, AI is going to go through the roof. Sure, there's going to be a huge ramp up. No argument there. But the valuation right now is nowhere near justified given future revenue and earnings. So should we see any kind of stock movement downward because things are getting too hot and the assumption that interest rates do start to climb higher, which they have been trending a little bit higher, ASML could take it pretty hard in the offer simply because an alternative investment, looking at the 10-year Treasury yield, right now trading about 4.55%. The yield on ASML, the next 4 quarters, given today's stock price of about close to $1,000, you're only getting about 2.25%. What's your downside on that 10-year Treasury? Eventually, the Federal Reserve, once they contain inflation, will lower interest rates, which means price goes higher. So if you did invest in that 10-year, you're looking at a 10 to 15 to 20% increase potential in the next 2 years. You're locking in 4.5%. The downside risk to ASML, you're only looking at 2.25%. Rational investors might sit there and say, that's too thin. I'm going to park my money elsewhere. And all of a sudden, ASML gets offered in a big way. Then it gets moved lower. So yeah, there is going to be some increases in revenue and earnings. But it's not justified given what they're going to be earning. Let's keep moving forward. This is, of course, the weekly chart I put together. This is SMH and SOXX. You can see ASML stock has underperformed. Now SOXX has, I think it's like 19% is NVIDIA. And NVIDIA, of course, has outperformed just about everything. They're seeing outsized revenue gains, but even NVIDIA is overpriced with the yield. The future yield is a bit on the thin side. So it's kind of in the same boat as ASML stock. Should we get a move downward in these stocks, you're probably going to see both NVIDIA and ASML stock moving lower. And it really boils down to simply this: what will happen with inflation and interest rates? And given the tiny yield potential with ASML stock, it's a high risk move right now. All right, moving forward, we get, I think it's the 17th of next week, we get earnings for ASML. Expectations are for earnings per share lower than last year this quarter. So there's a bit more risk there should we see a move lower. Now, another thing that I want to kind of point out is we're going to see more and more competition. My preference when it comes to, say, chip makers or AI investing, I'm not necessarily looking at the chip makers at this point. You're going to get the infrastructure built up. You're going to get some residual income from some of those chips with some of the deals that some of these companies are putting together. But for me, it's all going to be about services. The services companies are going to have a little bit higher of a margin when it comes to net margins, when it comes to profitability on AI. The hardware is important, but once they buy all that hardware, what do you do next? It's those services where they're continually building up. You sign someone up for services, and every month they keep paying and paying and paying. And then you just build up your customer base. Versus, say, a hardware maker, once they build these infrastructure, sure, you're going to continue to build it up, but that big growth spurt is already played out. And with ASML, the future yield is a bit on the low side. 2023 was a bit of an outlier moving higher. We're seeing in future projections for ASML 29.9, just a hair underneath 2023's print. But as it turns out, if 2023 was not necessarily as high as it was, looking backward, this is a stock where continuously you're getting increasing revenue over and over and over again, year after year after year. That's an important thing. If you look at this and ask the question, what can you reasonably assume given this chart for projected revenues beyond 2025, that ASML has the ability to continually increase revenues. Given any kind of economic environment, these guys can perform. Moving along, net margins 28.3. That's pretty fat. This is well above the S&P 500, which is only about 8.25. It's about 8 to 10% depending on the company on average for the 500. Now there are some winners and losers in there. There's some outperformers and there's some underperformers. But on a net margins basis, ASML clearly outperforms the S&P 500. So for every dollar they're bringing in, 28.3 cents is being brought in, retained by the company, which is huge. Projected earnings per share, 2024, a slight dip. Now I've seen a couple projections that are a bit below this. So maybe I'm being generous at 2050. Well, maybe we could call it 21. But let's break this down. Right now, U.S. Treasury yield is actually about 4.5%. 4.535, I think, is what I saw printed earlier. S&P 500, I take every single stock, all 500, and I ask the question, the next 4 quarters, given what each company would earn, what's the yield? Add up all 4 earnings per share for the next 4 quarters for each individual company. What I do with the S&P 500 is I only use 1 share instead of the whole market capitalization and breaking down like that. Generally speaking, all 500 shares, almost 5% yield. Given the price, $979 for ASML, if you look at these yields, you're looking at it's about 2.25, depending on the price. The price moved upwards, so I think this is why we're seeing 2.15% right here on this. That's thin. Your alternative, the benchmark, the comparison is the US 10-year Treasury, trading at 4.53%. Given that, asking the risk-reward question, the downside risk for the Treasury is far smaller while locking in that guaranteed 4.53%. If the Federal Reserve in the next, say, 2 years were to lower interest rates, that yield would go down, price goes up for those treasuries. So your downside risk on treasuries is minuscule. Now, I do believe that the Federal Reserve is going to have to raise interest rates further. I also believe because of that, this is going to rock stocks. So now all of a sudden we take a look at ASML stock once again. This is a stock where the yield is so small given future revenues and earnings. Now, and everybody's going to say, hey, listen, AI is going through the roof. That's a platitude. That's a bumper sticker. The metrics on it don't justify the current price. All those projections, those are analyst projections. So what's baked into the price in this is a bit too much. And it's being driven by other stocks, NVIDIA, which is overpriced at these current levels. So ASML has a lot of downside risk based on the interest rates, the benchmark, the alternative investment that you're measuring things against, could see a lot of downside risk for only 2.25% return for an investor. Now, you're not getting all of that as a dividend, but what is retained by the company, they can then invest into new business ventures. At this price, your investment opportunity is much smaller. What happens if ASML drops down to, say, $500? Now, all of a sudden, that $21 earnings per share in the next 2 years, or the next year, is a lot higher. When you start looking at it from that angle, any kind of downside move, sure, we could see a good, solid investment opportunity as a value investment. But at these prices, no way. This is far too high. And we weren't too far off from those kinds of numbers. And I kind of sat there with a calculator asking the question, 5%, 2 years out for the $30, you're looking at $600 as a more rational price. We were just there just a few months ago, but then NVIDIA printed what it printed, and of course, all of these stocks shot higher. My take right now, given what's going on with the economy, overall, I don't necessarily see the stock market selling off just yet. I see a lot of sideways movement simply because everybody's going to be looking at these hot inflation numbers and sitting there wondering, what's the Federal Reserve going to do? They're pretty much going to do nothing right in front of a presidential election. So you may see some spurts higher and higher in some of these stocks, but the downside risk just grows more and more. Eventually, the Federal Reserve is going to have to move and contain inflation by pushing interest rates up. That will contract the economy, so all this revenue gains that we're thinking these companies might get are not going to materialize at those levels. Given that, ASML stock, overpriced. If you're looking for continued value investment kind of information like this, I've got my new Substack. The link is down below. I did a write-up on ASML. The stock itself, broke everything down. It's on there. Make sure to hit the follow, get the free email from that as well. If you're just finding my content for the first time, the button's down below. Hit the like and follow. Thanks so much. See you in the next video.